Hi students, so welcome back to our second session on the cash flow statement. In last session we discussed about the direct method of the cash flow statement, and now we are going to discuss about the indirect method of doing the cash flow statement. Now let's go on to our format, how this indirect method will. Okay, so indirect method takes the net income generated for the period, that is the net income for that period, which means the P&L balance for that year, for that period, and adds or subtracts the asset and liability accounts to determine the implied cash flow. In the direct method, we directly found the cash flow, how much we have received from customers, how much we have paid to suppliers, how much we have paid to the salary of the staff, and all those things were all the operational details like working capital, how the inventory has changed, how the current assets has changed, how the current liability has changed, what is the impact on the cash flow, and we found the cash flow from operation, and then we found the cash flow from investing activity and financing activity. Investing activity and financing activity are almost same between the direct method and the indirect method. The only change is the cash flow generated from operational activity. So a cash flow statement will have three sections: first from the operating activity, second from the investing activity, and third from the financing activity. So investing and financing activity is same, so we will move that out. So the operational activity, the cash flow generated from operations, so that is going to be the key difference between the direct method and the indirect method. Now we will see the format, how this cash flow from operating activity of indirect method will look like. Yes, so this is the format in which first we will start with the net income generated for the period. It is the net profit for that period, which means the P&L balance of the current year minus the P&L balance of the previous year. That will be the starting point. And then we will add all the non-cash and non-operating items already debited to the P&L. So what are all not related to operations, but they have been debited to the P&L, these things we will add back, okay, so that the corrected P&L balance will come. Next, we will reduce all the non-cash and non-operating item that has been credited to P&L. So all these non-operating things or non-cash flow impacting things which is already credited to the P&L has to be reduced or taken out of P&L to find the corrected P&L balance. And after finding the corrected P&L, then we will do the working capital changes. Okay, so working capital changes is, what is your working capital? Working capital is current assets minus current liability. Current assets is, what are the current assets? Cash and cash equivalents, stock, inventory, all those things are current asset. Debtors, all current assets. What is current liability? Creditors is a current liability. So adjustment for working capital will come at that stage, and after adjustment of working capital you can find the cash flow that is generated or used from the operational activity, that is the output. Now we will see what are all that has been debited to the P&L. Okay, already been debited. Now we have to add back those things to the P&L net profit or net income for that period. We have to add back. Depreciation is a non-cash item, we are adding that. Transfer to reserves and provisions, what we have done for the current year, all those transfers has reduced your P&L balance. Now we are adding up because those things are not a cash flow. Next, goodwill has been, goodwill written off, okay, for that period will be debited to the P&L, so we have to take that out. Okay, preliminary expenses written off, that has to be adjusted. So whatever you have written off, that has been given a debit to the P&L, so we are adding back to the net income. So these are all actually not a cash flow from operations. So we are just adding these to the net income, so that the real cash flow from operations we can find it out. Okay, next, loss on sale or disposal of the fixed assets. So fixed assets you have sold, some portion of fixed asset you have sold, and while selling you have just sold at a loss, and this loss would have been accounted under the P&L account. Okay, so this loss I am adding back, okay, because I am correcting this, has to be sitting in the investing activity. Okay, so next, loss on sale of investment. So same way, what are all should not related to operations, operational expenses, non-operational expenses, but these are debited to the P&L, I am adding back those. Same way, non-operational incomes, those are credited to the P&L, should be reduced. So I will reduce gain on sale of fixed asset, will increase the P&L. Now I am reducing it. Profit on sale of investment, that is an investment activity. Now I will, this profit I will take that out from the P&L balance. That is the thing I want to discuss. The next thing is also the adjustment of the working capital. So what is working capital? As we discussed, it is decrease in the trade debtors. So debtors is going down. What is debtors? Payment pending from our customers. Okay, so that is going down, which means you are realizing cash more faster, which means it is good. So it has to be added. Okay, decrease in debt, debtors should be added. Decrease in bills receivables is again a bills receivable is also in the asset side, so should be added. Same way, decrease in inventory is a cash flow, it is good for the cash flow, should be added. Prepaid expenses is also the asset side, so it should also be added. Same way, for the current liability, the opposite will be increase in creditors will be added. What will be added? Decrease in debtors will be added, increase in creditors. So creditors means it is the payment pending to our suppliers. So if that is increasing, which means you have retained more cash, so it is good for the cash flow, so it will be added to the cash flow. Okay, and increase in bills payable is also a current liability, increase will be added. Increase in outstanding expenses will also be added. The exact opposite will happen. For example, if the current assets is decreasing, decreasing is added. Same way, when the current assets are increasing, it will be reduced. Okay, so it is consuming the cash flow. Current assets are increasing, which means your pending payment from the customer is increasing, your stock value is going, the cash that is locked in the stock has gone up, so these things will reduce the cash flow, so we are reducing. Same way, decrease in the operating liabilities. Okay, increase in the operating liabilities were added. Now decrease in the operating liabilities will be reduced, and finally you will find the cash generated from the operation before tax and income tax that you have paid for the current year. Okay, for the current year you will keep the provision, for the previous year you would have kept the provision, that provision you would have paid in the current year, so that you will reduce that income tax, and you will see the cash flow that is generated from the extraordinary. If any extraordinary item is there, you can adjust for it and you can finally find the cash flow from the operating activity. This is the format for the indirect method. Now we will go inside the problem in detail and see the indirect method problem, how to solve it. Yes, so balance sheet of JK Limited. Okay, the balance sheet is given. So for the previous year and the current year, the balance sheet is given. In the direct method, the 2 years, the previous year, current year balance sheet was also given. At the same time, P&L was also given. But here, only the balance sheet is given for the 2 years. So this is indirect method, and all the details of the balance sheet is given, and additional information is also given. Okay, let's use these things to find the cash, to make the cash flow statement. As I said earlier, cash flow statement, one advantage of attending this problem is you can check whether your answers is correct or not. So cash flow from operating activity plus cash flow from investing activity plus cash flow from financing activity, that is the total cash flow generated for the respective period under consideration. Now you can see the cash balance, the opening cash balance, what is the opening cash balance, and you can see what is the closing cash balance. So difference between the closing cash balance minus the opening cash balance should tally with the cash flow statement, then your cash flow statement is correct. Okay, so since we are able to check whether our answers is correct or not, and even if it is not, what we have left out, we can do the back work and find, and you can correct your current cash flow statement. That's why while completing the cash flow from operation, leave 1 or 2 lines before you total. Same way, when you find the cash flow from investing activity, leave 1 or 2 lines and then make the total, because when after your solution, if the cash balance is not tallied with the cash flow statement, then you can add some line item as per logic and correct your answers. Striking off please prevent those things from the cash flow statement, because you will invest so much of time to make this cash flow statement during your examination, and if you are going to strike that, okay, God can only save you. So please do not do any striking on the answer sheet. Do a rough work maybe behind the answer sheet, and then do the fair, and it's going to take a lot of time for you. If you have alternate choice, please go for it, and you very well know that, and confident, you go for it. Else, cash flow statement is also a good problem. It's also a easy problem, just a little time consuming. If you have that in mind, you can work it very fastly. And now I will say you how to work it. Okay, I'm not going to spend time in reading the question. I will directly go to the answer, and we will see how to recollect all those things. Okay, so here one part of the question is very important. Here it is decided that the stocks is valued at cost, whereas previously the practice was the value of stock at cost less 10 percentage. The stock was 2,59,000. So in the previous year, the stock, a particular item's stock was 2,59,200, and this was valued at cost less 10 percentage. Now the accounting policy is corrected, and they have said the inventory should be valued at cost. Okay, and when it is valued with the 2016 year close, at that time it is valued at 3,60,000. Okay, so this is a very important stock adjustment of the previous year. Stock is will have the major impact on the P&L. So inside the P&L there will be a cost of goods sold. After deducting the cost of goods sold only, we have got the P&L balance. So cost of goods sold, inside that the material part is opening stock plus purchases minus closing stock. So now the opening stock is valued, valuation is not correct, so we have to correct the valuation of opening stock, which means we have to correct the P&L balance also. Since for indirect method we have to start with the P&L balance only, now itself we have to do that correction. So cost, what is the 10 cost minus 10 percentage of cost is given as 2,59,200, and now we can find if it is valued at cost, it should be 2,88,000, but instead they have accounted only 2,59,200 in 2015 balance sheet. Now what is the adjustment required? 2,88,000 minus 2,59,200, 28,800 is the adjustment required for the opening P&L balance. Okay, and also the opening stock balance. Okay, so now we are going to start with the current income generated for the current year. So what is the income generated for the current year? Previous year P&L balance minus current year P&L balance. So I mean the current year P&L balance minus previous year P&L balance. So 360, here everything is given in thousands, which is 3.6 lakhs. So 3.6 lakhs minus 2,88,000 minus 2,88,000. So opening stock is adjusted by 28,800 as we discussed here. So it is adjusted for, and the income generated for this year, financial year 2016, is 43,200. So we have made this. Next we have to make the adjustments. Okay, so if you see here, general reserves has gone up. Okay, from 816 it has gone up to 9,60,000. So what is the increase? Approximately 1,44,000. This is actually increasing. P&L is debited for it, so we are adding this to the P&L because this is a cash flow from operation. Okay, next depreciation. It is given here, depreciation for the current year 4,20,000 is provided as depreciation. So depreciation 4,20,000 is a non-cash expense. So I am adding it to find the cash flow from operation. Next, provision for taxation. In the current year, you have made a provision for 4,08,000. This is not a cash outflow. This year provision will be paid only in the next financial year. So I am adding that because this is, I have not paid cash for it. Next, loss on sale of machine. This loss is debited to the P&L. Now I have to add this. How this 36,000 is calculated? Here you can see a fixed asset having a book value of 2,40,000 and accumulated depreciation for that is 84,000, which means 2,40,000 minus 84,000 is approximately 1,56,000, and now it is sold for 1,20,000. So book value is 1,56,000, sold for 1,20,000, which is 36,000 loss that is debited to the P&L. No, it should not be debited to P&L for because I'm going to add that back because I'm going to find the cash flow from operation. Okay, this is not an operation thing, so it is debited to the P&L. So I am adding back this 36,000. Next, premium on the redemption of debenture. So how is this premium? Because it is given here in the question, debentures are redeemed at 105. So most of the time the debentures, the nominal value will be a 10 rupee or 100 rupee. Here it is specifically said 105. So which means 100 rupee is the actual value of debentures, but it is redemption. Okay, redemption is made at or redeemed at 105. Now we will see what is the debenture. So opening balance is 9,60,000, closing balance is 6,72,000. So 960 minus 670, 2,88,000 is the debentures that is redeemed, and these are all 100 rupee per unit. So 2,880 units of 100 each. So 2,880 into 100 will give you 2,88,000. So total units is 2,880. Now it is redeemed at 5 rupees premium. So 5 rupee multiplied 2,880 units will give you 14,400 is the total redemption. Redemption means initially we have given the debentures and collected the cash, and now we are redeeming, which means we are paying out the cash and taking back the debenture slip. Okay, so now if you see, this is a cost that is sitting in your P&L. Now I am going to add that back because it is not a, I'm going to find a cash flow from operation, and this is not an operational activity. Next, proposed dividend. For the current year, I have proposed a dividend for 1,74,000. I will pay this only in the next year. But for the current year, I have proposed dividend. While proposing, I will keep a debit to the P&L. So I am adding back this 1,74,000. Preliminary expenses. You can see here, preliminary expenses has been written off. 48,000 has been written off, and that will debit to the P&L. And now I am adding back that. Next, fixed assets written off. So here it is said that fixed assets write off. Write off means debiting the P&L. Okay, from the asset side, this asset is no more usable, so you are writing off that asset. So fixed asset will go down. Same way, it will be written off to the P&L. So P&L will go down. So asset will go down. Liability will go down, and balance sheet will tally with each other. So write off the fixed assets costing 60,000. Depreciation is 48,000, which means 60,000 minus 48,000, 12,000 is the book value of the asset that is written off. So 12,000 is debited to the P&L. Now I am adding back that to the P&L. So finally, the funds from operation can be calculated. Next, we have to make the working capital adjustment. Sundry creditors is current liabilities. So current liabilities has increased current liability. So payment pending to supplier is increased, which is good for the cash flow. So it is added. Same way, next, current assets. You can see here, stock is a current assets. You have to keep in mind stock adjustment we have to make because opening stock is valued at wrongly. So 28,800 has to be adjusted to the opening stock. So closing stock of 12,72,000 is taken here. 11,34,000 is the opening stock, and 28,800 is added to it for the correction of opening stock valuation. Now increase in current assets. Current assets increase is negative for the cash flow because payment collection is going up or inventory is increasing. So cash locked up in the inventory is more. So cash flow is reduced. So it is reduced here. Increase in current assets is reduced. Increase in current liability is increase. Okay. So this is before taxation. So how much tax you have paid? The last year tax, or last year provision for the tax will be paid in this year. So last year provision for tax is 4,32,000, and 4,32,000 will be paid this year. And you can find the net cash generated from operation as 8,06,400. Next, we have to go to cash flow from investing activity. So what is the investment? Buying a fixed asset, buying an investment or making a fixed deposit. That kind of investment is also a investing activity. Now we can see fixed assets is 38 lakh is gone up to 45 lakhs. So some purchases of fixed asset has happened, but some fixed assets sale is also happened, fixed asset written off has also happened. Okay, so depreciation has also happened. So in order to avoid confusion, what is the purchase of fixed asset, we will open a fixed assets account and pass all the entries. So what is the fixed, I have opened a fixed asset account. Okay, fixed asset is an asset side will have the debit balance. So opening fixed asset is okay, the fixed asset at cost is 38.4 lakh, depreciation is reduced 11.04. So then the book value will come. So 3840 minus 1104 will give you 2736 as the opening balance. Same way, what is closing balance? 4560 minus 1392 will give you the closing balance of 3168. So closing balance is also found here, 3168. Okay, now we have to find okay, what are the other figures that we have to plot. Here it is said fixed asset with a book value of 2 lakh 40, okay, accumulated depreciation of 84,000, sold for 1 lakh 20,000. So there is a sales for which cash will come to you, and this cash is 1 lakh 20,000. So sale of fixed assets 1 lakh 20,000 is a cash inflow. Okay, now you have sold for 1 lakh 20,000, but what is the actual value? If you see 2 lakh 40,000, depreciation is only 84,000. So 2 lakh 40 minus 84,000 will give you 1 lakh 56,000, and this 1 lakh 56,000 is sold for 1 lakh 20,000 only. Okay, so balance 36,000 is a loss. So loss on sales is also accounted in the fixed assets account. So fixed asset is reduced by 1 lakh 56,000. This is the cash generated by sales, and this is because of the loss. Next, depreciation, it is given for the current year 4 lakh 20,000 is a depreciation. Yes, depreciation also I am crediting it. If I am crediting the fixed asset account, the fixed asset balance will go down. So depreciation is crediting the fixed assets account. Next, it is also said asset written off cost is 60,000, on which depreciation of 48,000. So book value is 12,000. So that is written off. 12,000 is written off. So all the details are available. Credit side total is 37 lakh 80,000, 37 lakh 56,000. So the debit side total will also be 37 lakh 56,000. So the balancing figure is the purchases. So in the debit side, whatever fixed assets is purchased, so the debit balance will go up and fixed asset value will go up in the balance sheet, because assets have the debit balance. So the purchases you have made on fixed assets is 10 lakh 20,000. So that is in the negative sign, because you have spent the cash for purchase of the fixed asset. So it is in a negative. Next, sale of investment. Okay, so what is, so here they have given one detail, investments are sold at a profit of 48,000. So sale value, what is the sale value? What is the cost plus profit? Profit is given as 48,000, and here you can see investment 4 lakh 80,000 has gone down to 3 lakh 84,000. So 4 lakh 80,000 minus 3 lakh 84,000 is 96,000 is the cost. So balance sheet asset side will be booked in the cost only. So cost has gone down by 96,000, while there is a profit on the sales, that is 48,000 added. Total sales amount will be 1 lakh 44,000. Since it is a sale, it is a cash inflow 1 lakh 44,000. So cash flow from the investing activity is cash outflow, which is 7 lakh 56,000. Next, we can see the financing activity. You can see share capital has gone up to 19 lakh 20,000 from 14 lakh 40,000. So 1920 minus 1440 will give you a cash inflow of 4 lakh 80,000. Next, redemption of debentures. So debentures you have redeemed, and it is redeemed at premium. That also we discussed. Premium amount of was 14,400. That also we discussed. And here you can see the debenture account 960 has gone down to 672 because of redemption. So 960 minus 672 is 288. 2,88,000. So 2,88,000 plus 14,400 will give you the total total cash outflow of 3,02,400. So because of redemption of debentures. Next, dividend paid. So that is also okay. So dividend paid that is also a financing activity. So dividend paid is last year dividend we will pay in the current year. So what is the last year dividend that is proposed? 1,44,000, out of which 18,000 is unpaid here. So 1,44,000 minus 18 becomes 1,26,000 is paid in the current year. So since it is pay out, so I am reducing it, and total cash from the financing activity is 51,600. Now add the cash flow from operation, cash flow from investing, and cash flow from financing. Net cash generated is 1,02,000. Now we have to check whether this answer is correct or not. You can see the cash balance here. Opening cash balance is 2,10,000. Closing cash balance is 3,12,000. 3,12,000 minus 2,10,000 is 1,02,000. Hence our answer is correct. That's why we can check the answers of cash flow statement. Okay, so we will see one more problem on the indirect method today. Yes, there is a balance sheet of the company for the 2 years is given here. So previous year and the current year. So balance sheet, the complete balance sheet is given, and there are additional information. Each and every additional information has to be read very carefully. Then only we can make a correct cash flow statement. Yes, as same way, instead of reading out the question and spending some 5 minutes of the time, let me go to the answer and I will find out all the relevant points from the question, and we will make a meaningful discussion in solving this problem. So as discussed, this is also no P&L is given. This is also an indirect method, and indirect method will start from income generated for the current year. So how to find the income generated for the current year? Current year P&L balance minus previous year P&L balance. So come to the balance sheet, P&L is given here. So P&L 3 lakh minus 2 lakh 10,000. So 3 lakh minus 2 lakh 10,000 is given here. It is 90,000. This is the first step of cash flow statement. It is a net income generated for the year. Next, general reserve. Yes, general reserve has been increased. So that should be added back because P&L will be debited for it. Next, provision for taxation. You have made any provision for taxation? Yes. 1,05,000 is a provision for taxation, but it is given in the question provision for taxation made during the year is 96,000. Then what is 1,05,000? So the remaining 9,000 will be some provisions of previous year that is carried forward. We are making cash flow statement only for the current period. In the current period, you have made provision for only 96,000, which is debited to the P&L. Now I am adding back this 96,000 to the P&L. Next, proposed dividend. Dividend proposed for the current year will be paid in the next year. So in the current year, 1,44,000 is the dividend that is proposed. Now I am adding back this 1,44,000. Next, we can find 2,65,000 as a subtotal as of now. Next, that will be the profit before tax. Next, adjustment for the depreciation. Adjustment for the depreciation. So in the additional information, there is no detail given about the land. So land and building, you can see 7 lakh was the opening balance and 6 lakh 50 is the closing balance. So there is no additional information that is given, which means 50,000 reduction in the land and building is because of the depreciation. So land and building depreciation is a non-cash expenditure. So I am adding this because this is not affecting my cash flow. I am adding this to the income generated so that I can find the cash flow from operating activity. Next, plant and machinery. So plant and machinery 6 lakh has become 6,60,000. Let us see what is the additional information that is given. So okay, so depreciation for the plant and machinery, it is given one point that depreciation charged on plant and machinery at 20% on the opening balance. So opening balance is 6 lakh as given here. So 6 lakhs multiplied by 20% is 1,20,000 is the depreciation charged on the plant and machinery. As it is a non-cash expenditure, I am adding this also. Next, investment has been sold and there is a profit on the sales. This profit will be credited in the P&L. So we have to reduce this 15,000. So I am taking this 15,000 out because this is not an investing activity. Next, loss on the sale of plant and machinery. So it is said here, machine costing 80,000 was sold for 36,000 and written down value is 45,000. So the book value is 45,000, which is sold for 36,000, which means 45,000 minus 36,000, 9,000 is a loss. This loss will be already debited to the P&L. Now I am adding back. So now I am adding back. Okay. Next, coming to the goodwill. Okay, here you can see goodwill was 1 lakh opening balance. 80,000 is now the opening balance, which means goodwill is written off. Certain goodwill is written off. When it is written off, the P&L will be debited for this 20,000. So I am adding back this 20,000 to the P&L. Next, okay, while doing the closing, interest will be paid on the debentures. What is the interest? 11% interest will be paid on the 3 lakh is the closing debenture balance. So 11% on 3 lakh is 33,000 is the interest that will be charged to the P&L, but it may be a financing activity. So I am adding back this interest expenditure, and now I am generating the cash flow from operation before working capital changes. Now we have to see what is the working capital changes. What working capital? Current asset adjustment and current liability adjustment. So first let's go for the current assets adjustment. What are the current assets that is there? Stock and debtors. Okay, and there is prepaid expenses also. Okay, stock is reduced. Okay, reduction of stock is a positive to the cash flow, so decrease in stock is added. Next, prepaid expenditures is also gone down, so it is added. How much it is gone down? It is added. Next, debtors has gone up. Okay, increase is a cash outflow, so which means we have to reduce the increase in the debtors. Next, we will go to the current liability. Current liability, there is only one thing, which is creditors. Creditors has gone up, which is good for the cash flow. Okay, because payment pending to the supplier, more payment is pending, which means more cash we have retained. So we are adding the increase in creditors. Then we are generating cash flow generated from the operation. Next, income taxes that is paid. What is the income taxes that is paid? Here 80,000 is the provision for tax made in the last year, that will be paid in the current year. So 80,000 have to be paid this year, but in this year we have made only 96,000 provision, but provision in the balance sheet is 1,05,000, which means 1,05,000 minus 96,000, 9,000 of previous year taxes we have not yet paid, which means 80,000 we should pay. In that 9,000 we have not paid. So 80,000 minus 9,000, 71,000 is the actual cash outflow for paying the income taxes. So I am deducting the income taxes actually paid in the cash form, and we have calculated 4,23,000 as the net cash flow from operating activity. We will move to the investing activity. Yes. So what is the investing activity here? It is said investments were sold, and while selling the profit of 15,000. So profit is 15,000, that is given here profit. So there should be a cost, and cost plus profit will give you the sale value. What will be the cost? Balance sheet will always book the values in the cost. So 2,40,000 was opening, 2,20,000 was closing, which means 20,000 is the difference that is sold. So 20,000 should be the cost. Okay, so 20,000 plus is the cost plus profit of 15,000 that is given in the additional information. So 35,000 is the sale value. So 35,000 is the sales. So it is a cash inflow. So I have taken it in the profit. Positive. So next is sale of plant and machinery. So here it is said sold for 36,000. So sale of plant and machinery is 36,000. Very good. Next, purchase. Is there any purchase of plant and machinery that has happened? Land and building, there is no purchases, only depreciation was charged. But you can see 6 lakh has gone up to 6,60,000, which means there are some purchases of fixed assets. Apart from that, there is some depreciation also, there is some sale of asset has also happened. So it is better to open a plant and machinery account. Okay, so plant and machinery account I am opening. So asset will have a debit balance. So opening balance of plant and machinery is 6 lakhs. I am bringing this 6 lakh to the debit side. Same way, the closing balance is 6.6 lakhs. So closing balance of 6.6 lakhs, I am bringing it here. Next, depreciation, it is already said 20% on the opening balance. So opening balance is 6 lakh multiplied by 20%. So depreciation will be credited to the fixed, then only the fixed asset balance will go down. So 1,20,000. So 20% on 6 lakh is 1,20,000. That is done. And next is the machine. Old machine is sold for 36,000. So the sale value 36,000 is brought here. Actually, the book value is 45,000. So 9,000 is a loss. That should also be taken out. So I am crediting that value also, which is loss on sale of the fixed asset 9,000. So now the total on the credit side is 8,25,000 and the total on the debit side will also be 8,25,000. So the balancing figure will be the purchases of plant and machinery. So purchases means we have paid amount to buy it. So the cash outflow for purchases will be 2,25,000 negative. Okay, so the total cash consumed, okay, or used for investing activities 1,54,000. Next, for the financing activity. So what are all the financing that has happened? Preference share capital has gone up by 1 lakh. So 1 lakh is the cash inflow that we have got. Next, you can see premium, security premium. So we have issued, maybe issued at a premium. So the 25,000 premium amount also we have got. So that is also a cash inflow from financing activity. Next, premium on redemption of debentures. So debentures we have redeemed at premium. So how much we have redeemed? You can see here debentures value has gone down from 5 lakh to 3 lakh. So 2 lakh debentures has gone down and premium of 20,000 as given here. So 2 lakh plus 20,000, 2 lakh 20,000 is the total cash outflow from debenture financing of the debenture. Okay. Next, dividends paid. So proposed dividend for the last year will be paid in this year. So 1,36,000 is the proposed dividend last year that will be paid for the current year. So 1,36,000 is a cash outflow. So it will be in negative. Next, interest on the debentures we took out from the operating activity, which is 11% interest on 3 lakh closing balance, which is 33,000, and that 33,000 will be reduced here. Okay, it is from operation we removed and now inside the financing activity we are putting, and the total will be the cash generated or used in the financing activity. So cash flow from financing activity plus cash flow from investing activity plus cash flow from operating activity, if you total, it's coming to 5,000. Let's check whether this answer is correct or not. Okay, as per opening cash balance is 88,000 and closing cash balance is 93,000. 93,000 minus 88,000 is 5,000. So your answer is correct. Okay, your answer is correct. So what is asked in the question is cash flow statement and statement of changes in working capital. We can make that is very easy. So as given in the question, we will go for the working capital. What is working capital? Current assets minus current liability. We will take all the current assets. Stock is a current asset, debtor is a current asset, prepaid expenses, cash and bank. Okay, from the balance sheet that is given, I am taking all the values here. So all the values I am taking just like that here, and I am just putting whatever is the increase, whatever is the decrease also, and also current liability side there is only creditor as current liability, and this current liability I am taking it here. So current assets minus current liability, you can get the working capital. Working capital opening is 6,06,000, closing is 6,89,000. So the working capital has gone up by 83,000. So this is the statement of changes in the working capital. So students, all the very best for your preparation. Cash flow statement is very important. Please watch the video. I also suggest please work out while don't just see the video, some grasp something in mind and go for the examination, or draw a cash flow statement. Writing will always help for this kind of problem, students. So all the very best for your examination. Thank you.